Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of LikeFolio. Welcome to the show, Andy.
Thank you.
All right, so we're talking Chewy. You know, this stock was dead in the water for a few years here. We've seen a little bit of a resurgence in some of their growth numbers, and with the stock, you know, basically at over 1 year highs. Are you guys seeing the same kind of data that the stock buyers are seeing here at this point?
Yeah, we were seeing the same kind of data that would have led to this sort of stock appreciation. But now we're starting to just see some yellow flags. We're starting to see some cracks in their digital traction. When we look at web visits for Chewy, it's pretty good. 14% up 14% year over year, but that's really flattened out and decelerated over the last couple months in a pretty concerning way. And then even more concerning than that is app usage. The Chewy app is where most of their most loyal customers are using to make purchases, and we're seeing app usage down 28% year over year, which is an enormous number, and really accelerating a downtrend in app usage, which tells us that Chewy is facing some significant competition. I think they're facing a lot of competition from the DoorDashes of the world, the Instacarts of the world, because you can order pet food delivered from a pet store or grocery store and get it within a couple of hours rather than relying on them shipping it across the country to you over the course of a couple days. So, Chewy's in a tough spot here. I think, I really respect what the company has done. I love the company. I think they're really well run. I just think Wall Street's gotten ahead of itself in thinking that the recent acceleration that we've seen in all of their target metrics is definitely sustainable. I just think that we're starting to see at LikeFolio some data points that suggest, that acceleration was great, but it's starting to stall out or even reverse to the downside. And so I'm a little bit concerned going into this earnings call that the company is going to have some guidance or some KPI data points that disappoint investors, especially with the stock hovering where it's at today.
Yeah, Andy, up 36% in the last 3 months. And you know how we know that it's run a long way? Mizuho yesterday lowered them from an outperform to a neutral, but raised the price target to 47. So that tells you how far this stock is run. But competition, everything I read, competition is their key problem. They're auto ship, they're in the right business, they're doing everything the right way, but sometimes you just can't stop the Amazons and Instacarts and these other companies that do, I can not only get dog food, I can get other things as well. And they're such a boutique company, but they're, people are so attached to their pets. I think they'll always have their little market share, but it's not like, how do they compete with these larger companies like this? I mean, all the good things they do, most of it you can still do on the other, on their competitors. So it's a tricky place to be, but this is a well-run company. Make no mistake, they do it right. They give people that love their pets the concierge boutique attention that they want. The question is, Andy, is it enough?
Yeah, is it enough? And then I think that competition is rising, and Chewy's like you said, Chewy's always going to have its loyalists. It's always going to have its extraordinary fan base, and they've earned it through the way that they treat their customers, the way that they execute orders and auto ship on time. They've earned that very loyal fan base, and I think that very loyal fan base is growing. It's the kind of lackadaisical users, that haven't been fully bought in, that I think are very susceptible to the DoorDash, to the Instacart type of programs that can, bring the same items to you within just a few minutes. I will say that we like the Chewy's health division, very high margin vertical for them. We're seeing that up 66 or 76% year over year, which is really great growth. But That's a major cool down from what was plus 300% earlier this year. So again, I think the company's doing well. I just think that Wall Street has anticipated an acceleration of this recent growth that simply, according to LikeFolio data, at least, is not materializing at this point. And so that's when stocks get ahead of themselves, and a lot of times that's when stocks have negative reactions to what are overall pretty good earnings reports, and that's what we expect when they report.
Yeah, their last quarter they beat expectations, and revenue was up 14.9% year over year. So it was a pretty good quarter for them. So Andy, when you look at this as on an earnings score, yeah, you guys had positive data on it, but now with the stock parabolic since the last quarter's results, got up to $48 a share, now around 45. I mean, are you guys still positive? What's your score on this one?
No, we're actually a negative 52, which is pretty bearish on this. It's just one of those where you say great company, going to be a good report, but the bar is just so high. We don't see, looking at the data that we have, we don't see how they get over it, and we don't see how they can come out on the earnings call with a whole lot of positive guidance into the future about these business units, because everything that we're seeing is that their customer base is solid and growing, but it's not accelerating its growth like Wall Street expects.
All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down. It kind of sets up, Kevin, with